Guys, last video I was talking about market structure, so I thought it was important for me to go into the back test and show you how I look at market structure. I wouldn't say it's necessarily the same as everyone, but there's like a fundamental, foundational way that everyone does it. So what I look at here is sell pressure and buy pressure. If sell pressure is increasing, it implies that sell pressure is going to, like, price is going to start selling more. If buy pressure increases, it's implying that price is going to start buying more ultimately. So we'll start from this point here quickly, because this is what I have marked on this back test. What we see here is, within here we see a downtrend, a small downtrend that tries to form, but obviously it reverses and continues up. It breaks it here, retraces, takes a long time to get out of here, then pushes back up. So because this is the highest point of this downtrend and this is the lowest point of this downtrend, I've holistically taken it from the swing high ultimately to the swing low. And obviously I would have used previous data to look at this, but it's alright. So now when price pushes all the way up here, before it gives this sharp rejection here, this is the beginning of this move down here. This is the beginning of the uptrend to the top of this sharp move, like this retracement. Not that it's necessarily a downtrend, but it's a short retracement if we were to take out the Fibonacci and look at that. So now what I would do is I would take this sell pressure here. This is the previous sell pressure in the market, and I would place it here with the expectation that price would fulfill this previous sell pressure, because this is how far sellers got into the market the most previous time over here. This is as much as the sellers would get into the market before the buyers started taking price up. That's the way I would look at the market, because I would normally place a Fibonacci, but you see that it overperforms it. So this would probably be like, the 1.2 something or 1.414 of the Fibonacci that it overperforms to. But that would be fine anyway, because from here we'd be looking for sells. So I'm just going to skip this so that I can explain it in more depth. But what I would then do here is take this buy pressure and place it here with the expectation that price is going to fulfill at least the previous buy pressure. But you see that buyers were, supply and demand wise, buyers were more interested than they were previously, and price was capable of pushing up more next time. So over here, at this point in time when we see this, I would have done the same thing here. You see the sell pressure has increased compared to the last retracement. The sell pressure has increased. This is an implication that sells are going to become greater in the market. So when you start to see sell pressure increase, you see the distance of this one compared to the distance of this one. When you start to see sell pressure increase, you got to understand that sellers are more interested in selling the market. So you have to be careful in your understanding. So this is a good indication that price may not go fulfill this 100%, because basically what this line is here is from this low here, I would place this, and if price is going to go fill it 100%, it would go and hit 6128.76. But as you can see, it's probably not going to do that. Now the daily time frame isn't the only time frame that I'd be doing this on. The 4 hour, the 1 hour, and then I enter on the 5 minute is what I'd be doing this on. So someone would say, okay, so why would you not assume that it's going to go fulfill the 100% again? Is because we know that the market isn't just going to move in a linear way and just downtrend, uptrend, downtrend, uptrend, downtrend, and just carry on going in the uptrend, innit? We know that there's going to be consolidations or bearish trends or downtrends. So what I would do is, for example, this is the 4 hour, and I'd mark out this 4 hour, do the same thing in regard to sell pressure and buy pressure, and use that to understand what price is going to do. So basically, I'm looking at this like, okay, buy pressure increase here and sell pressure also increase here. What you're seeing over here is that buy pressure decreased, but we've previously seen that sell pressures increase over here. So the sales got to a further spot, basically. So I would then take this line here when we're seeing that price is breaking this zone here, and I would mark it like this with the expectation of it potentially going to hit here. Now, we've seen that of this big move here of the daily candle move that we've marked the Fibonacci on, it's past the 0.5 and it's hit the 0.618. So even though I could potentially be looking for sells here, I wouldn't automatically switch to sells. I would wait for a couple confirmations. I feel like the biggest confirmation would be for price to go and break this low. But once price breaks these lows and begins to break these lows with high volume, then I would still continue to look for sells. So at this point, I would be expecting price to fulfill this, but I would also place a Fibonacci on this. And I know, guys, it can get confusing. So if you want me to explain more, then just let me know in the comments. But I would place a Fibonacci here. You can see it's gone to 0.5% of this sell pressure here. So we see it rejects of the 0.618. Let's see what happens. Let's just click it. Right. So this is what I mean. So this doesn't even mean that it's only gonna go follow the 100%. It could continue breaking these lows, right? So now when we're seeing a hole, and you see how it's hit the Fibonacci's perfectly as well. So now that we're seeing that sell pressure is increasing, sell pressures at least increase here compared to this last sell here. This is an implication that sellers are in the market more. Now, this is a problem because the last daily only fulfilled about, let's just say, 0.6% of, or 60, okay, let's say about 58% of the 100% that it recently did, right? So this is showing that the buy pressure is decreasing because the 100% of the last one, only 58% was fulfilled. So what you could assume, because on the 4 hour you're seeing a change in trend, is that the daily trend is going to be shifting into a downtrend or a consolidation phase, because you're seeing this strong downtrend being formed within here. Obviously you can expect retracements, but then also expect it to continue going down. So we're looking here, and if you're talking about this sell pressure here, if you're going to take the assumption that sell pressure is going to increase, you can take this daily sell pressure that we placed. Sorry if it's a bit messy. We could take this daily sell pressure here and mark it here with the expectation that price is at least going to get to this zone. Then we could also mark a Fibonacci on this, but not yet until this is broken, because this Fibonacci, this up move isn't invalidated yet because the low isn't broken, as well as that it could be a liquidity grab. So you have to take all the potentials of what could be happening into account. This could be a liquidity grab, or some sort of mean reversion, but it's also fair to assume that a downtrend could be beginning to form. So we go forward, let's see. Okay, this is no shock here that it did this. This downtrend is still here. So if we put this daily trend here, this daily sell pressure here, what you'll see is that it slightly overperformed the daily sell pressure. But from here, it would be fair for someone to, let me get rid of this Fibonacci so that it's clear again. Right, this is the daily. Let me make it a different color so that you guys know. This is the daily sell from here. Let me make this a different color as well. Should have made it a different color from the beginning. Yeah, so this is the daily sell, right? And you could have set a Fibonacci here, and we see that this buy did not even get up there. It only got to about 60% of the previous buy pressure. So if you would then go on the lower time frames again to see where the price is going to flip,